I know you all love that music. All right. Okay. Uh, Welcome, everyone. Good afternoon, good evening, or good morning, depending on where on this earth you're joining us from. And welcome to another episode of the AI Circle, brought to you by the iFlip YouTube channel. I am your host, Aaron Yoon. I am the product manager here at iFlip. And joining me today is actually a couple of different people. Normally, it's just Kelly and myself. But for today, we have a trifecta here. Lee Gearhart, the director of sales, is also joining us. Welcome, Lee.
Thank you. I think this is a first for me.
I think so too. And of course, we have our very esteemed Chief Investment Officer, Kelly Korshak. Welcome, Kelly.
Hello, everybody.
So there's a little bit of there's a very specific reason we are doing this this way, doing the AI Circle this way. I am actually not in the country right now. You might be able to tell I'm a little bit tan. It's not just the lighting. I actually did get quite tan. I'm actually on vacation with my family in a different country, and the Wi-Fi here is spotty at best. So just in case we have issues. Lee very graciously offered to be the backup host in case something goes wrong, and we can hand off the streaming management and responsibilities over to Lee. And with that being said, we're going to do things a little bit differently for this particular episode. And I know a lot of you like to listen to the iFlip AI Circle as like a podcast kind of thing. So, and then do the trivia question at the end. And engage and enter your answers, at the end. But I'm going to submit the question to you guys right now, which is a little bit different, and we'll accept the answers at the end. So the question is, it has actually nothing to do with the market at all. It's purely for fun. Here's the question right now. It is, where am I on this planet? I told you I was on vacation.
You out.
Lee and Kelly know where I am, obviously, but I am not in the country right now. I'm in a different country, and I'll give you a little bit of a hint for the view over here. You can tell that it is nighttime over here. The sun is set, so hopefully that gives you a little bit of a hint as to what time zone I'm in. But the question for tonight, let me set that up again here. There we go. All right. So the question for tonight is, what city and country am I in right now? So take your time, put on your detective hats, submit your answers, and the person that is the closest geographically, it will be our winner for tonight. Okay, so we're starting off with that just in case I drop, and we have to address that later. Of course, today we are the market had quite a bit of activity happening this past week with the Fed and all that kind of stuff. Jerome Powell really knows how to move the markets. We were going to get into all that good stuff, but we can't do any of it until we get through everyone's favorite part, which is the disclosures. So please bear with me for just a moment as we go through this. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip portfolios that you select are suitable for your investment profile before trading in a live brokerage account. Now, with that out of the way, how do I get this? Okay, now, with that out of the way, I'm going to pass the mic over to you, Kelly. And
Thank you,
please,
Aaron. It's about time.
Enlighten
Let's
us.
get that mic.
Please
All right.
Enlighten us. Give us an update on the market.
Hello, everybody. Again, what is today? It is Wednesday, March 8th, 2023. And I'm going to go right to it, folks. I'm going to share a window, a screen. with everybody. Let's share this window here. I hope everybody can see it. This one of our issues is often granularity. Oh, I can see it. It looks okay. We're going to kind of run through today the usual markets, the AI and component of what we do. And also I'm going to share with you a couple other things, some things I've noticed about spreads recently that I want to kind of tweak some people out there's minds about what I look at to determine how I think about the markets or how you write code and train algorithms, how to learn something. So always to start off, here's a chart of the S&P 500. And as you can see, this is a monthly chart, a long-term monthly chart of the S&P 500. And when you look at it, I think, I hope you guys can see this well. When you look at it, you can see that the long-term trend of this market is obviously much higher. And we have come off of a correction recently from 2022, since this is the high of 2022, of 2021, and then we come down, and now we've rallied up a bit. And where do we go from here? I want everybody to know that we are sitting literally on top of a 200-day moving average currently. So this is one of the reasons why the market is very bumpy in here. If we were to bring this into a daily chart, sorry, if I move this to a daily chart from a monthly chart, you will see what is really going on. And literally, this is now a daily chart. We are bouncing off of a 200-day moving average. Perhaps I can bring it up quickly here. Let me do it over here. There we go. This little line down here, this orange line, is a 200-day moving average. Notice that how we're getting support on this 200-day moving average over the last literally about 10 trading sessions. We went through it last week, and then we bounced off of it from underneath it. And then we had a powerful rally followed by another little rally that failed at the end of the day. And then, of course, that was Monday. And then, of course, yesterday was a sell-off. Today, even though the Dow was down, the S&P was up marginally. But this, of course, you might think is a result of Jerome Powell. Yes, it is. But there's something bigger going on in the background that I think we all want to keep an eye on, and I'll show you that in a moment. But just note this, again, this is a very critical area for the S&P 500. I feel that the longer we sit around this area, the harder it is to predict where the market will go, because it is stuck. It is in the limbo land that even should it go below the S&P 500, there will be something to allow this market to bounce. Because right now, even though the market feels weaker than it did, is of course in January, where we had a very powerful rally in here. It is, and in February we came off of that rally, and now we're in March, and we're just waiting to see should we be here or not. What is holding up the market is very simple, folks. It's called algorithms. These algorithms are the reason why we see these movements off of these kind of lines that you're seeing. This is a Bollinger Band up here. You have an algorithm that has an explosive day like we had here, followed with a follow through, and then nothing. And then, as a matter of fact, a sell-off. Again, an algorithm, just one thing, it takes a little spark. And then you get the algorithm start to turn out, and they push the market hard, 1.5% to 2% in a given day. That tells me there's no investors in the market anymore. There's no Fidelity. Sorry, there's no people out there investing. It is run entirely by algorithm, and those algorithms are just executing the amount of cash inside of either a smartfolio in the terms of a mutual fund or an ETF. Those people give their orders to different people. Thank you for the split screen, I think. And that's how we get these big bounces and big rallies and big declines. So just know, this is algorithmic, folks. Let's look at the bonds. And the bonds are telling a totally different story. If we look at a long-term bond, a 30-year bond, we're going to see this chart here, actually this chart here, let's move to that. If everybody can see that, I'm hoping they're seeing the whole screen and not me. But if you see this chart here, you'll see that we got the opposite thing going on. In the beginning of February, the bond market imploded and it came way down, way off the little rally it had in the beginning of January, this rally, and it gave all of that away. And now it too is sitting at a lower 200-day moving average Bollinger Band. But the bottom line is, if we look closely at this chart and we zoom in more and more, look what we see on a daily chart. This is a market that does not look healthy. This is a market that, if I expand this out a little bit more, hopefully you see it. This is what is going on here since the top of COVID. This is COVID's high. Interest rates have done nothing but go literally way down under COVID. This is March of 2020. And then ever since then, interest rates have gone up. Let's take another look. And here's where I'm going with it, folks, to a monthly chart. If we looked at a monthly chart, let's bring in a lot of months. This is a chart going all the way back to literally 1999. So this little line here represents, this is the rates, these rates that we see right now on a long 30-year treasury bond are at the same price as during the financial crisis. So this yield is the same price it was 14 years ago. Yet the stock market on a monthly chart has done that. So the stock market, going back to 1999, has done nothing but go up. But the bond market, of course, has priced itself literally back to 2000, the financial crisis here. So what has happened here? Why is this the case? And what does that mean? What does that mean for your portfolios and your investments, whether they're with us or anywhere else? Let's take a quick look and see if I can show you this chart. I'm going to add something to this S&P 500 chart, and I'm going to add a long bond. Here we go. Let's take a look at these things together. And I think this is going to show interesting to you. This is the spread difference. So this is the price of a long bond. The price means the price goes up on a bond. That means that the interest rate goes down. If the price goes down in a bond, it means the interest rate goes up. Look at the spread disparity since the turn of the century. What's happened is the stock market has gone up. I see it there as 327% over that period relative to the bond market. It's actually, the stock market's up actually more than that, but relative to the bond market, it is up 327%. So let's look at this a little bit differently. When you see a spread like this, that tells you that generally there's a reason why these things do spread. And I'm going to get into that real quick now. At the end of the day, I think it's very important to note that the stock market will naturally, because of our population growth, even though it's been basically flat over the last number of years, there are more people in the workplace. More people in the workplace, and the same age group, actually a little bit marginally younger, is going to attract more investment inside the stock market than the bond market. That's number one. So there will be a natural tendency for stocks to have a bid and a purchase relative to a bond. Most people are more interested in stocks than they are bonds. Right now, the bond market is about a $40 trillion market in the United States, and the stock market's about a $20 trillion market in the United States. What this means is when I started my career, the bond market was literally 40 times bigger than the stock market, 40 times, 40. Today, it's only 2 times bigger. That disparity has changed because the population in the country and the people that are employed in this country has gone up marginally on the population, but high on the employment. Those monies get invested into 401k plans, and they become IRAs. And that is the reason why the stock market will, at some level, always attract more capital over time than the bond market. But something else is also being showed to you in this spread. At the end of the day, one is a market that is naturally designed to go up, the stock market, especially in terms of an index. And the other one is one that is naturally designed to stay steady, which is a bond market. Basically, we try to keep simple interest rates literally between 4 and 6% for the long run. Over the last 10 years, we've had a very big boon in interest rates. And that, I think, marked the end of a 40-year bull market in interest rates, where rates continue to go lower. What is now happening is a reversal. But what we see, why the stock market has just not got the memo, that the bond market is in deep trouble. So when Powell came out today to fight inflation, and yesterday, all he's pointing out is that he has to be able to keep rates higher in order to fight inflation. The only ammo he has is to cut back on the balance sheet, raise the Fed funds rate. He's getting no help on the fiscal side from the federal government, for example, to lower taxes. As a matter of fact, the federal government is trying to do the exact opposite and raise taxes, which would be a disaster for the country. 40 years ago, we had higher interest rates. Ronald Reagan came in and he lowered the tax rate. He didn't raise it. He lowered the tax rate. Inflation went away. The stock market began to rally, as well as the bond market. What is happening here? The opposite. It's unsustainable, and there's going to be a big problem. Bottom line, the machine learning is trying to push us out of the market. It is trying to hang in there and keep it in. But I can tell you, as I mentioned last time, we're trying to get out. And you might have noticed over the last 2 weeks, since I saw you all last, we did get out of half of the positions in the stock market. And now there's a very high probability that we're going to get out of the other half over the next week or so. At the end of the day, we'll call it this. It's very difficult now for me to predict the S&P because there is a huge tug of war. It will break one way or the other. I suspect it's going to break lower. But until the stock market gets the memo that this is not something really we should buy, and they start to look into the data that is coming at them and embrace it for what it is, as opposed to deny it, and see that right now there is no real deep value in the stock market, then ultimately they will start to see investors move away. And before we get into any further predictions, I want to show one more chart, Aaron. This is a very important one, I think. And let me get this one out there. It's on Bitcoin.
Interesting.
Yeah, I think this is everybody might have noticed that Bitcoin recently, do you all see the chart? Yep. Bitcoin recently has gone down. We saw a chart where Bitcoin went lower in price. And Bitcoin was around 24,500. And then it had a move down of about 1,500 points. It was down 5% or so the other day and another 2% today. But what I am showing here is something interesting. All of you guys know that in our platform, we also trade the GBTC. That's the Global Bitcoin Trust. That's the thing that is a proxy for Bitcoin. And notice over the last few days, the Bitcoin has gone down quite a bit, and the Global Bitcoin Trust has gone up. The Global Bitcoin Trust is up 10% over the last 2 days, while Bitcoin has been down about 8%. Why is that? This is true because what's happening is the Global Bitcoin Trust is actually revaluating itself and is one of the largest buyers of Bitcoin you can have. Now, they're not buying Bitcoin. They're just readjusting the value of all the Bitcoin on their platform. This is why these two markets have converged. This convergence is also telling us something else. The recent down move in Bitcoin is a result of a repurposing of the Bitcoin inside the GBTC. It tells you we should be at the end or very near the end of the move down in Bitcoin. And I look at this as a trade. I would be a buyer of Bitcoin and a seller of the Global Bitcoin Trust if I wanted to hedge it. So that, I think, is part of an explanation as to why all of a sudden this big move down in Bitcoin, and yet the stock market hasn't done anything. Aside from the decoupling, Bitcoin has become actually more valuable, less valuable as a function of the largest fund that owns it completely. There is no larger owner of Bitcoin than the Greystone Bitcoin Trust. And so if you want some predictions out of me, I say now, I was wrong on my last prediction. I thought it would be within 3%. I guess we were right on that one. The bond market has continued to decay. I was kind of right on that one. But now it's very difficult to predict what we're going to see over the next couple of weeks, because the market
Kelly, I know you have to jump soon, so I just want to get some.
sorry.
I do want to get some things out of the way,
Please.
as to just wrap up as very clearly. What you just got done? You actually segued it pretty good. You just got done showing us basically the convergence of Bitcoin and the GBTC. How can people who use iFlip to invest in GBTC, like maybe in their custom smartfolios, or they trade it manually, they buy and hold it manually?
Yes.
What does this mean for them?
What this means for them is if it's me, and this is an idea that we have, or we wanted to implement if we can have ever Bitcoin on the platform. The idea is you can never, if you want to own the Global Bitcoin Trust, which is the proxy on our platform for owning Bitcoin, what you want to be able to see is the spread of these two items widen. What had just happened is they converged. Now they move periodically back and forth. They converge and diverge. If you can look at the chart, you'll see instances when they're very far apart. As for example, if you could see my arrow here, look at the price here relative to the price here. That is a wider area than it is now. Look at now the distance is here to here. So this distance is smaller. When they're very wide, what you want to do is buy the Global Bitcoin Trust. When they become narrow, you want to get out of the Global Bitcoin Trust. So the perfect trade here, if we can execute without commission, which is impossible on the Bitcoin portion, is you want to always be, in this case here, I would be close to being a seller of the Global Bitcoin Trust and a buyer of Bitcoin itself. What I was trying to do, Aaron, is explain why the Bitcoin went down exactly in proportion to the Global Bitcoin Trust.
Right. And I think we can do that's a very interesting concept. And that's something I know that you want, that's a strategy that you wanted to implement in other areas as well, maybe in a future smartfolio, perhaps. But for the time being, for today, can you also just kind of summarize what does it mean for the stock market and the bond market having a similar kind of actually divergence? What does that mean for the AI? What can our viewers, our iFlip subscribers expect in terms of iFlip activity, in terms of buys and sells and holds? And I know that's your last segment.
Yes. Well, the answer to that is one of the things that the machine learning looks at. Machine learning and AI can be used interchangeably, folks. One of the things it looks at is that spread between interest rates and equities, U.S. equities. And it looks at that spread specifically with the 30-year bond, a 10-year bond, as well as a 5-year bond, all against the S&P 500. So we look at those three spreads. And if those spreads are very wide, we expect them to, by the way, naturally widen. However, they're widening at a pace that is unsustainable. Why? Because if you look at the demographics of the country, they're not sustainable to represent why one would be up 350% more than the other and remain so, even though one of them, the bond market, has gone much higher, more than doubled in yield. So the machine learning will see that spread, and it will make a decision to sell regardless on the equity markets. This is one of the reasons I've remained so cautious. We have the 200-day moving average as just an algorithmic pointer, but we now have a machine learning item that we look at closely, along with other things, that they're starting to signal it. And so the machine learning is so close to offering a signal that we can expect everybody in the portfolio that we are going to be out of the S&P again in the near future, just as we were last year for 95% of the year. We held no positions in the S&P.
Final question, Kelly. If we go to cash, and let's say we actually go completely into cash in the near future, if you're right about this, how long do you think we're going to stay in cash? Is it going to be another 2022 kind of situation? Where
I don't feel that, but I think we could be in cash for 4 or 5, maybe 6 months.
Gotcha.
It's a possibility. Gotcha. The machine learning just doesn't like it, and it overrides everything else algorithmically.
Well, folks, you got a little bit of further evidence on the value of AI and algorithms working in tandem with all this evidence that we were presented with tonight, with the markets doing all kinds of crazy stuff. I know, Kelly, you have to jump, but let's go right into the trivia question. I know that
I want to rat him out, but I got to jump. Everybody, thank you until next time, but I won't rat you out, Aaron. Talk to you all later. All the best.
Thanks, Kelly. Thanks for being a good sport here. All right. So last call for any answers about where am I? I want the city and the country, right? So far, I've only got countries. So I'll even go as far as to say I'm feeling festive. I'm on vacation. I will give out 2 prizes. We'll pick 2 winners tonight. I don't know, Lee. What do you think, Lee? You think that's okay? Are you okay with that?
Yeah, I'm only seeing a couple answers though so far.
Yeah. So if you've been seriously, if you've been listening to our AI Circle shows as kind of like a podcast, kind of like a passive listening experience, that's great. But this is a time where you should engage, get off of whatever you're doing, get on the phone, get on your keyboard and type in your answers, because you have a chance to win. And what is our prize? So our prizes so far ever since, I guess, pretty much this entire year has been a recording of the Mastering the Markets live event that we had in October. Now, that will continue to be the prize for tonight, but upcoming soon, we do have another event coming up in May, and we're going to start giving out tickets to the event in May 4th and 5th. Save the date. Use Cinco de Mayo if you need a mnemonic device to help you remember it. Okay, we will be in Dallas again. It's not going to be a trading and financial markets event this time. It's going to be a little bit more broader and more generic in terms of alternate investing included, and just kind of money rules and psychology. All bunch of cool stuff. It's not as niched down into the financial markets as it was last time. So we're going to start giving away tickets to that as well. Not tonight, not just yet, but you want to make sure that you tune in for each of these shows. So if you haven't already done so, make sure to smash that subscribe button, smash the like button as well if you're enjoying this kind of content, and make sure to hit that notification bell so that you don't miss another live show, because we are going to be giving away lots of cool stuff coming up soon. All right, so we got a couple of more answers here. All right, so Bahamas, Cayman Islands. I've never been to the Cayman Islands. I would love to go there at one point, but we do have a winner. Our winner for tonight is someone that actually submitted his answer really early on in the show. I am in the Dominican Republic. So Santos is our first winner for tonight. So I'm going to give you guys one more chance. I'm going to give you 30 seconds. And I'm going to ask you for what city inside of the Dominican Republic am I in right now? And let me get my graphic ready here. I love playing with this stuff. All right, 30 seconds. Put in the city that I am in the Dominican Republic right now. Interestingly, we didn't get many answers. I guess people aren't that familiar with the
Google.
cities.
Google doesn't
Yeah.
go fast enough.
Yeah, it wasn't. Yeah, they were looking up the cities, is what I'm guessing. We're getting still some last minute answers in Santo Domingo. Oh, I see the right answer here. Santiago, Santo Domingo, a couple of answers, but the right answer is oh, did I click the right one? Yes,
Yep.
Punta Cana. So Jim Garrigus, I don't know how to
Garrigus.
say that. Garrigus
So I'm gonna
is
guess.
our second winner for tonight. So both of you have just won copies of the encore recording, the replay of Mastering the Markets live from October. Stay tuned for more prizes to come. We are going to start giving away tickets to the May event. And that'll do it for this episode of the iFlip AI Circle. Please, everyone, give a special round of applause and appreciation and a shout out to Lee Gearhart for co-hosting with me today. Make sure you subscribe and like the iFlip YouTube channel so you don't miss your chance for the next prize. And I got to go back to my vacation here, so I'm going to sign off.
Oh, darn.
And we'll see you guys next week when I'm back in New York for the episode of Mailbag. Thanks and good night, everybody.